Hey fellow stock Cardians, it's Wednesday, May 5th, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a mixed stock market once again. I looked into why the Dow index hit a new record high, dug into Match Group's earnings, and discussed why Peloton's stock price continued to fall. The Nasdaq index finished the day in the red. In contrast, the other two indices ended the day in the green zone, but only barely. Despite the slight upward movement by the Dow index, it hit a new record high thanks to a few solid quarterly earning reports by the likes of General Motors. The economic indicator that grabbed my attention today is ADP's private payrolls report that grew by 742,000 in April. While the growth was quite solid, it still missed the expectation. At this point, no one doubts the US economy is on its way to recovery, and missing the expectations by a few thousand isn't something that investors are worried about. Shares of Match Group jumped more than 3% today. If you don't know Match Group, you should. It has more than 45 online dating brands. It has solid operations with growing revenue, profitability, and free cash flow. It announced its quarterly earnings reports yesterday, and investors were pretty satisfied with the company's performance. Revenue, operating income, adjusted EBITDA, number of subscribers, and revenue per subscriber were all up. That's what you'd want to see from the companies you invest in. Moreover, based on analysts' price target, the stock price still has room to grow up to an average target of $162 per share. You can see the average price target on the company's stock card under the fair share price section. By the way, remember we discussed Alteryx 6% jump yesterday? Shares continue to move up after yesterday's better than expected results today. Shares of Peloton dropped more than 14%. The stock price is down 45% since the start of the year, but today's price drop comes after a voluntary recall of the company's treadmill product. A few weeks ago, there was the sad news of the death of a child after getting injured by Peloton's treadmill. While it might be tempting to jump on the wagon of buying the dip, however, remember, this is the product-related issue that could impact the company's future growth potential. It's not too different from when a restaurant such as Chipotle announced an E. coli outbreak in 2015-2016. While Chipotle managed to recover from the dip quite nicely, but it took a few years for the company to do so. Product-related issues tend to damage a company's brand and reputation. It takes a lot of marketing dollars and time to recover from it after the initial technical or product problem is resolved. Perhaps hold before buying the dip in Peloton's stock. That's it for today. If you haven't already done so, please give StockCard a try. Research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the stock pick page on a StockCard's platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. And as always, help us grow the StockCard community by liking and subscribing and sharing these daily market recap reports with your fellow investors. I'll see you tomorrow.